Did you notice the slight dip in mortgage rate this week? Amazing news. If you have been holding off on that next purchase, you will want to hear about the economic events that brought us here. From inflation data to consumer spending trends, here is what is shaping the real estate and lending landscape this week. Mortgage rate update. Let's start with the headlines number for mortgage rates. This week's the 30-year fixed rate mortgage average began at 7.15% and ended slightly lower at 7.07%. For those in the real estate investment space, the DSCR interest rate is standing at around 8.32%. PPI signals hope for inflation control. Next, we will look at the Producer Price Index, which provided encouraging news. On January 14, the PPI data revealed that wholesale prices rose only 0.1% month over month, suggesting that inflation pressures on producers are easing. This supports the Federal Reserve's effort to slow inflation without over-tightening. Lower inflation pressures typically lead to stability or slight declines in interest rates, providing some relief for homeowners and investors. CPI brings more good news. Shifting to consumer-focused inflation metrics, January 15 brought the Consumer Price Index report, which it showed an annual inflation rate of 3.2%, a slight decrease from the previous month. That's an amazing news. Core inflation, which excludes volatility, food, and energy prices, remains steady at 2.7%. These numbers reinforce optimism that the Fed might pause further rate hikes, making it a promising moment for buyers and borrowers to assess their options. Retail sales reflect resilient consumers. Now, let's turn to consumer spending. On January 16, retail sales data showed a 0.4% increase for December, beating expectations. While strong consumer spending can signal economic resilience, it may also fuel inflation. However, the balanced growth seen here suggests a stable economic environment that isn't overly inflationary. This is reassuring for the real estate industry as it indicates steady demand without abrupt rate increases. Finally, let's wrap up on a high note. This week's economic data brought a mix of optimism and stability. The slight dip in mortgage rates reflects a broader trend of cooling inflation and economic resilience. For borrowers, buyers, and investors, this could be an excellent time to evaluate opportunities before market shifts again. Thanks for tuning in. Follow me on Instagram or TikTok at Eli_Weisman and on Facebook for more valuable financial tips. Or feel free to call me directly at 718-383-1537 with any real estate or financial question. I look forward to seeing you back here next week on our weekly market update. Have an amazing and profitable week. Bye-bye.